Core element of our investment strategy has been the multi-asset allocation strategy. How can investors implement this effectively?
From time to time, markets do get choppy, they do get volatile. A lot of people say that I invest only in equity and they don't do asset allocation. You are assuming that markets will not get choppy. Who will do only fixed income? Is someone who says that I'm okay if my money loses its purchasing power. Who will do only gold? Is someone who thinks that the world is coming to an end. The reality is that markets have always been choppy, they will always remain choppy. So asset allocation is a must.
Should all investors have multi-asset allocation strategy in their portfolios? And
today there is nothing called tax-free and the risk-free rate is say 6.5%. In general, asset allocation is very important. Whether you do it yourself or through a multi-asset fund, that's your choice. Throughout the month of October, we were the only fund which gave positive return in October. So our allocation is 10 to 40% in gold, 15 to 45% in equity, and the rest in fixed income. Investing is not about maximizing or minimizing anything. There is no choice other than to optimize.
what should be the ideal time frame that investors should hold the multi-asset allocation fund?
The minimum is 2 years.
How about SIPs?
People think that SIP is only for averaging. So SIP is a good facility to have even for a product which is more saving oriented rather than only growth oriented.
A very warm welcome to all our viewers to another episode of Cedrus Knowledge Series. We started this knowledge series 4 years back with an intention of creating a platform where we could have conversations in understanding how should we navigate through the financial markets. Over the last 4 years, we've had the privilege to interact with multiple speakers who've been veterans from the financial industry. And not just finance, but we've had the privilege to interact with speakers who have helped us understand how should we take care of our health and overall well-being. And this holistic approach has made us understand that health is the actual wealth. For this edition, I'm extremely honored to introduce to you none other than Mr. Aashish Sommaiyaa. He's the Executive Director and CEO at WhiteOak Capital Mutual Fund. He's been a pioneer in managing the multi-asset allocation fund, and with a rich experience of 25 years in this industry, his valuable insights have always guided us to plan our investment strategies. So let us delve into discussion with Mr. Sommaiyaa and understand what are his key takeaways in the current market situation. A very warm welcome, sir. It's an absolute privilege to have you with us today.
Thank you.
At Cedrus, core element of our investment strategy has been the multi-asset allocation strategy. Predominantly, it's a strategy where one can diversify across various asset classes while keeping in mind the risk-return parameters. So coming from there, my first question to you is that, particularly with markets being quite choppy in the last couple of weeks, asset allocation has become a key factor in driving the portfolio performance. So multi-asset allocation, as I just mentioned, is often seen as a strategy to diversify while keeping in mind the risk-adjusted return. In practical terms, how can investors implement this effectively while planning their investment strategies?
Sure. So thanks for having me. Very interesting set of questions. Now, in your opening message, you mentioned that markets have been quite choppy of late. Fact is that every investor needs to keep it in mind that from time to time, markets do get choppy, they do get volatile. And we need to think, before talking of asset allocation, we need to think that who will not do asset allocation. For example, a lot of people say that I invest only in equity and they don't do asset allocation. So if you're investing in equity only and you don't do asset allocation, it means that whether stated or unstated, you are assuming that markets will not get choppy. You are assuming that equity will give you straight line return without giving you sleepless nights, and that you will be able to stay the course just as it is. Who will do only fixed income? Is someone who says that I'm okay not to get return. I'm okay if my money loses its purchasing power. Who will do only gold? Is someone who thinks that gold is the only store of value and who thinks that the world is coming to an end, so only gold is the one. Now you can imagine that why you need to do asset allocation becomes more clear if you understand what is the presupposition if you don't do asset allocation. So the point is like this, that none of the things which I said is going to happen. Only people who are too deterministic in life, जिनको हर चीज का complete surety होता है, वही लोग asset allocation नहीं करते हैं, और फिर वही लोग, when there is volatility, they are the ones who get nervous the first. The reality is that markets have always been choppy, they will always remain choppy. And not thinking of all probabilities, not thinking of all eventualities is what actually derails people from their original game plan. So asset allocation is a must, and every time when markets become choppy, some asset classes do well, some other asset class takes a beating, and then if you have a well allocated multi-asset kind of portfolio, that is what rebalances and gives you downside protection, even while ensuring that you are not distracted from your ultimate journey for making returns. So it's a must. I mean, there is no way not to do it.
Right. And it's very, as you just mentioned, that knowing where not to invest is more important in this kind of a market. Very rightly said.
Yeah, absolutely. And see, also, again, I'm saying that, a lot of times when you explain to people that you must do asset allocation, they will listen to you but not follow your suggestions.
Right.
So when you don't do asset allocation, what are all the implicit assumptions you are making and how foolhardy those assumptions are? I think that needs to be highlighted.
Right, and that's basically driven by the behavior of investors, which the euphoria what we've seen in the market of late.
Yeah, because people tend to just extrapolate. अब तक जो चलता आ रहा है वही चलेगा. People become, inertia in the mind.
Right.
So yeah, that should be avoided.
Right, but should all investors have multi-asset allocation strategy in their portfolios? And if yes, why? And if no, why not?
So, see, asset allocation in some form or format is important. Now, whether you buy a multi-asset allocation fund or you ensure rigorously at your own end that every quarter or every month or every 6 months you review your asset allocation and you do all the rebalances, that could be a choice. The second important thing nowadays, why multi-asset funds or the kind of funds that we have launched, why those funds are gaining prominence, is not only for asset allocation, but where an asset allocated portfolio is presented to you as a alternative solution for your fixed income requirements. See, what has happened in the last few years is that investing in fixed income has become unattractive for 2 or 3 reasons. One, you can clearly see that interest rates have dropped quite drastically, right? I mean, today, I remember 25 years back, RBI bonds were giving 12% tax-free. Today, there is nothing called tax-free, and the risk-free rate is, say, 6.5%. Bank deposits are 6%. So one reason for fixed income becoming unviable is that interest rates have dropped a lot. And second, that it is fully taxed now, right? I mean, any interest you earn or any capital gain you get on a purely fixed income fund is straight away added to your income and taxed at the marginal rate of taxation. Now, through some of the multi-asset funds, what are we doing? We put predominantly more like 60% into fixed income. And the balance, we have a mix of equity and gold, right? So what happens is that the equity gives you some upside. Whenever equity has volatility, the gold actually gives you downside protection. So combination of equity and gold gives you risk-adjusted performance. And obviously the other 50-60% in fixed income gives you good fixed income returns.
Stability.
Right? So in general, asset allocation is very important. Whether you do it yourself or through a multi-asset fund, that's your choice. But even beyond just the purpose of asset allocation, a smartly allocated portfolio can be a great proxy, a great tax-efficient proxy for investing in fixed income funds.
Income, yeah. As it's an alternative to fixed investment.
Yeah, because it can create a portfolio which behaves quasi like fixed income, right? Because through this combination of debt, equity, and gold, ultimately, if we offer you something which is low volatility and return which used to be there in fixed income in the past, then, I think you are home.
Absolutely. Right? And while you were just mentioning about taxation, I think recently we've seen emergence of 2 subcategories also, based on the new taxation norms that have come in. Could you broadly elaborate on these 2 subcategories?
Sure. So now see, clearly taxation, like one I said, is that if a fund is more than 65% into fixed income, then it gets classified as a fixed income fund. And then in a fixed income fund, the entire capital gain or whatever you earn from it is added straight to your income and it's taxed at the marginal rate of taxation. So that is one, which is more than 65% fixed income, okay? The second is, let's say if you are more than 65% equity, if you're more than 65% equity, then it is treated as an equity fund, right? And in an equity fund, any holding more than 12 months qualifies as long term, and then that capital gain will be taxed at 12.5%. Now comes the third one, that let's say the kind of example I gave you. The fund is neither 65% plus fixed income, nor is it 65% plus in equity. Because we are keeping 50-55% fixed income, 25 to 30% equity, and 20-25% in gold. So this fund is neither 65% equity nor 65% fixed income. It's like a hybrid combination created to simulate fixed income performance, but it is not 65% fixed income. So it falls in the hybrid category. For this kind of fund, if it is held more than 24 months, it qualifies as a long-term asset. And again, the tax is 12.5%. So I think it's a beautifully positioned category where we are able to simulate fixed income plus kind of performance. And the taxation is not as adverse as fixed income.
Fixed income.
It's equity taxation, just that the holding period is 24 months instead of 12 months.
Right. No, and investors can plan their tax efficiency based on.
I don't think anybody is investing for such a short time frame that you can't avail of tax benefit over 24 months. I mean, it's quite attractive.
Right. You were just mentioning about how WhiteOak multi-asset allocation funds diversification between equity, gold and debt is placed. We saw that, recently with the markets falling, WhiteOak had not fallen and had given one of the best performance in the multi-asset allocation. So could you elaborate a brief on that?
See, I always explain to people that sometimes, we keep talking about asset allocation, you keep talking about equity, debt, gold, you talk about correlation and you talk about variety of numbers. What I find is that sometimes if you keep on talking about a concept which is mathematical or logical in nature, it may be a bit difficult to understand. So let me use different terminology. We all have studied chemistry when we are in school or college, right? Now what happens in chemistry? You mix 2 or 3 different substances to create a fourth, product. Now when this product is created, it may have some properties which it inherited from all those 3 substances, but it will not look like any of those 3 substances, right? You draw out the properties from each one of them and it creates something new, but it does not necessarily behave like any of those original ones, right? So in a multi-asset fund, when we combine debt, equity and gold, what does it do actually? It gives you the stability which comes with fixed income, because ultimately we are going to hold 3, 4, 5 year AAA, AA plus bonds, correct? Second, it gives you the hedge kind of property of gold, because when, let us say when Ukraine shoots a missile on Russia, or let's say, people are worried about debt in US, right? If the dollar is supposed to depreciate, for example, when there is geopolitical issues, when the dollar is under challenge, when US is forced to cut rates, anything of this happens, gold is the one which gives you downside protection.
Right.
And the third is that when the economy is functioning normally, when corporates are exhibiting profit growth, when markets are doing well, then equity gives you the appreciation. Now what happens is that when you do a combination of all of these 3 in an appropriate proportion, right? And you allow each of the 3 asset classes to rebalance, meaning that if equity becomes expensive, automatically it will reduce equity exposure. If gold becomes expensive relative to equity, then, or gold becomes expensive relative to dollar, then you start reducing gold, right? If, for example, equity yields, right, earnings of equity divided by the valuation of equity, if that is more attractive than the bond yield, then you start increasing equity and reduce debt. So there is various mathematics or various valuation parameters which are deployed, whereby gold, equity and debt, it keeps rebalancing against each other, right? And then it creates a combination where you're not supposed to take a view on equity or debt on gold. You just let them be. You already baked in the mathematics out there. Depending on that mathematics, we know which asset class, how much allocation we want, right? And whenever anything in the valuation changes, the asset classes rebalance on their own.
On their own.
Right? Like for example, just say throughout the month of October, we've been reducing gold and started to buy equity. Whereas in reality, equity markets were doing badly, correct?
Right.
We were the only fund which gave positive return in October. But by the time end of October and November came, we were actually increasing equity and reducing gold. So that happens because we are not taking a view on any asset classes. We are just following the relative valuation and allowing the asset classes to find their own balance in terms of where they should be. The last thing I'll tell you is that a lot of multi-asset funds are created to give you equity-oriented taxation. They have been done to reduce the impact of taxation. Now what happens is if you do a fund saying that expressly that I want equity taxation. So our laws are such that if you insist on equity taxation, it will make you hold 65-70% equity. The moment you hold 65-70% equity, then having 10-15% gold is not going to be an effective counterweight to that equity. In our case, we have not done any such insistence. We have first created the fund ground up, saying that I want a low volatility product, which will give me a good, high single digit, low double digit kind of potential performance. To achieve this combination, what type of asset allocation should I make? So our allocation is 10 to 40% in gold, 15 to 45% in equity, and the rest in fixed income. Since the time we created the fund, on an average, we have been between 20 and 25% gold, between 25 and 30% equity, and the rest in fixed income. So that is the reason why whenever markets become bad, having 20-25% gold is what holds up the performance. And whenever the stock market rallies, having 25-30% equity is adequate to give you some upside.
The upside.
And having 55 to 60% fixed income ensures that the portfolio is stable and doesn't gyrate a lot.
Wonderful. I think having this correlation between risk and return is something what helps one plan.
We should always explain to investors, and everybody should keep in mind that when you do investing, like I said, asset allocation is important to investing. Now, when you do investing, you should always remember that investing is about, good investing is about optimizing. Most people always think in terms of maximizing. If you try to maximize your return, it always comes with high volatility and high risk.
Absolutely.
Right? People who maximize the return don't do asset allocation. They put all their money into
equities.
Right? People who try to minimize the return, they put everything in fixed income, so they will not get return. So investing is not about maximizing or minimizing anything. The fact is that there is no choice other than to optimize. You always arrive at what risk you can tolerate, and for that risk, how much return you can get. It is always about optimizing. It is never about maximizing or minimizing anything. The faster we realize it is about optimizing, we'll all come to the right way of doing asset allocation. That's the final answer.
Correct. Investors, ask us about multi-asset allocation as a strategy. What we at Cedrus also always say that it's very important to understand the relative return and the risk-adjusted return, because it's all correlated. So coming to my next question, what should be the ideal time frame that investors should hold the multi-asset allocation fund? What time frame of objective should they consider allocating their investments here?
See, if you're just thinking about ensuring that you don't get hit on the taxation, then the minimum is 2 years. Because if you hold it for minimum 2 years, then it qualifies as a long-term asset and you get a taxation of 12.5%. So the least that you should think of is 2 years. Otherwise, if you're happy with low volatility and a good steady return, then forever, it doesn't matter. There are many people who want a monthly income. So what they do is that they put a chunky amount of money lump sum into a multi-asset kind of fund like ours, and then they, keep withdrawing some sum of money every month. So it is ideal for those kind of purposes. So you can hold it for as long as you wish, but the minimum is 2 years.
And how can risk-averse investors, like risk takers, I would say, how can they incorporate multi-asset allocation?
There are many times when people want to enter equity, but they don't feel comfortable doing lump sum. Right? Then we tell them that, okay, put money in a liquid fund and switch it over the next 12 months, etc. One way to do it is to go for a hybrid fund like a multi-asset fund which we've created. Because what will happen in times like this, if you put 100 rupees, it will straight away put out of 100, say 27 rupees into equity or 28 rupees into equity. The balance will be held in gold and equity, in gold and fixed income. With 27, 28 rupees in equity, what will happen is that if the market falls, it will protect your downside because bulk of your money is in gold and fixed income. The second is when market falls, it will reduce gold and fixed income and add more equity. So what happens is that even sometimes when people are long-term investors, let's say somebody is thinking 10-15 years, but they don't want a situation where at entry only it falls 10-15%. So anybody who's investing for the super long-term, like 10-15 years also, if they want a gradual entry into equity, and you are not somebody who can take some 10-20% downside the moment you start. Like see, anybody who started in September, they must have first seen a 10-12% downside. You start investing with the right intent and you see 10% down, you get very jittery. So I think even long-term investors who want a smooth start to their investing journey, they can start with such a fund.
And how about SIPs in multi-asset allocation funds?
See, it's a good savings product because it's low volatility. See, a lot of times what people think is that SIP is only for volatile products. That people think that SIP is only for averaging. But SIP is not just, why do you do recurring deposit? Why do you do FD with recurring? Right? You put monthly money into an FD. FD is not volatile. Why do you do that? You do that because it's a savings product. So multi-asset fund, which is a low volatility fund the way we have created, it can be a good saving product for regularly for people to just set aside some money. And it's not necessary for averaging the volatility of equity. So SIP is a good facility to have even for a product which is more saving oriented rather than only growth oriented.
Right. No, wonderful. I think a lot of differential key takeaways that you've given. One is we should know where not to invest. That is very important. Secondly, understanding risk-adjusted returns through, investing in multi-asset allocation funds. And each investor can incorporate this fund, long-term, short-term, medium-term, and take advantage of the diversification. It's very insightful discussion, sir.
Thank you.
What will be your final advice to all our viewers while planning their investments in the current markets and especially while planning investments in the multi-asset allocation strategy?
See, I think the first thing that we discussed, I think I would like to everybody to pay attention to that, which is that when you invest in a certain way, when you say that I'll do only equity, only fixed income, there are certain implicit assumptions or presuppositions which get baked into your behavior. So if you're somebody who says that I will invest only in equity, you're assuming that equity market will give linear performance, and you're assuming that if it falls 15-20%, you will not lose sleep over it. Whereas in reality, the best of people lose sleep when it's down 15-20%.
Absolutely.
So I would say that whenever you make a particular decision, whenever you move towards a particular decision, step back for a moment and think that for my decision to be proven right and for my decision to give me peaceful sleep at night, what are the assumptions that I am making it? Implicit or explicit. But what are the presuppositions or what are the assumptions that are there for my investment to go correct and for it to give me peaceful sleep? If you think back, then you will realize that, yaar, if I put everything into equity, I am assuming एक लाइन में चलेगा और मेरा रात को नींद भी नहीं उड़ेगा. ऐसा नहीं होता है. Then you will realize why asset allocation is important. So क्या है कि कितना भी asset allocation के बारे में सोचो तो समझ में नहीं आता है. लेकिन नहीं करोगे तो क्या होगा वो सोचना चाहिए पहले.
बहुत बढ़िया. Very well said that we have to implicitly or explicitly think about what would be the implications of not investing in multi-asset allocation and then incorporate it while planning our investment strategies. It was a wonderful discussion, sir.
Thank you.
An absolute honor, as always, to interact with you. A lot of valuable insights for all of us, I'm sure. Thank you so much for making the time for this knowledge series that we conduct.
Thank you. Thank you to all your listeners. Thank you very much.